Good afternoon, everyone. You're all very welcome to Thursday's US Market Open. So today's theme, into obviously US session open in just a couple of moments, a couple of minutes, is caution is the order of the day, and I suppose that's kind of where we are with the current themes within the markets. And we've had a lot of geopolitical issues this week. We've had volatility and turbulence in the yield markets and bond markets. And we've seen that being reciprocated back into the traditional asset classes, the stock market indices, and of course in the commodities, in the likes of oil, gold, and of course in the FX markets as well. So I think today, starting off, first things first is really looking at the current sentiment within the market. So yesterday, we saw considerable widespread consolidation in the primary stock market indices. We saw consolidation in the dollar markets. We saw volatility again come back into play in the commodity markets, with gold and oil continue to rally and continue to soar off of those geopolitical tensions that we're continuing to see in the Middle East. Now, since then, into yesterday's afternoon, we kind of say, as I said, 3 o'clock is a very telling time for when we start to see real sentiment being visualized and reciprocated through the course of the US markets trading session, that is. And we saw widespread selling coming through in yesterday again. We saw it across the board. S&Ps, Nas, Dow Jones, all moving lower yesterday through the course of the session into last night's session close. So that saw the S&Ps move through the 4350s, 60s, down into the lows of where it was this morning, around 4300s in the CFD market, spot CFDs, and 4340, 4350 in the futures markets. We saw a similar kind of a team being acknowledged in the NASDAQ and the Dow Jones, basically insinuating that indices were, as we kind of expected, with that little bit of risk aversion, with that little bit of a spike yesterday in the dollar towards the end of the session, through the back end of the session, of course, the indices as a result move lower. We are seeing today into 1:30 as we move to today's trading session. Of course, we have seen some fairly decent volatile swings in the markets. We are seeing that little bit of dollar movements that we saw yesterday abate back into the ranges, of which is allowing those indices to find a little bit of a short-term bottom. Now, as we come to today, I think the first things first is looking at the data 1:30. The jobless claims coming in pretty much as expected, around that 200,000 mark. So 200 has really been kind of the benchmark for the last number of weeks. And we're still seeing that kind of continuous number play out. I think the big talking point today is going to be Fed Chair Powell, who is speaking at 5 o'clock. So at 5 o'clock yesterday, we had a raft of federal central bank speakers coming out in the afternoon between 3 and into the close. We have the same again today with Powell speaking at 5. We've obviously got bill auctions and tips auctions throughout the afternoon. We've got Goldsby, we've got Bostic, and we've got Harker all speaking as well. So we are expecting that continuated volatility to resume today, like what we saw yesterday between, as I said, 3 and 9 p.m. as the US session really got going in the afternoon yesterday. So where we are today is effectively trying to find a little bit of a floor. Yes, we have found a little bit of a floor in some of those indices, like I said, with the S&Ps, the NASDAQ under 14.9s, and the Dow Jones, which actually did get a little bit of a sell-off yesterday as well, are all trying to find bottoms today. Now, I think it's important to really resonate. Is these bottoms actually really kind of going to hold, or are they short-term pullbacks for further selling? And I think that's where, as I said, that kind of 3 o'clock, that first half an hour after the market open is really important, because really then you can kind of ascertain sentiment right through for the course of the session. And I think none better than that is obviously looking at the DXY and bringing in those other assets, like, as I said, even indicators like the VIX, the volatility index, will help gauge sentiment as well, because we know from a fundamental perspective, if you're trading the indices, you should be looking at the DXY and you should be looking at the VIX, right? The VIX will give the volatility implied in the markets, and the DXY will give the kind of correlation or negative correlation, which is going to play out, obviously, the relationship between the dollar and the stock markets. Now, today, short-term trading perspective, we have actually seen the dollar run lower in the last couple of hours or so, really since 11 o'clock this morning. The last kind of 3.5 hours or so, we have seen the dollar run a little bit lighter, back into those ranges. Now, if you want to get a realization of where we actually are for the week, this is where we closed on Friday, up around that 106.70 on the DXY. We did get into those weekly opens where we opened actually on Sunday before the gap down, and we have come off it again, which is showing that overall this week we're holding above 106 as a floor in the DXY, but we're also holding above last week's close, which, as I said, comes in around that 106.70 level. So today, as a result, with the DXY selling off, it has allowed the indices to catch a short-term bottom, like the S&Ps, like the NAS, like the Dow Jones. And I think that's really, really important to note as well. Now, with the DXY rolling over, the idea of seeing price action come back into that kind of 105 level is key. We did see a little bit of a reaction, obviously, last week off 105 from Friday the 13th. Since then, euro dollar as a broad consensus has been fairly range bound, fairly consolidated. And that, of course, has been insinuated by the fact that the DXY overall has remained consolidated. So if the DXY and the indices are going to remain broadly consolidated within a, let's say, a 1 or 2% range, that's of course going to feed through into other assets like the FX. Now, on the converse side of that, if you look at gold, from where we are in gold, not really much has changed from where we were yesterday. So yesterday into the session open, we were at 1950. We were at that barometer around 1950. Not really much has changed since then because we're still in around that 1950 level. So as I said yesterday, yeah, we could continue breaking through into the 50s, the 60s, and the 70s. Absolutely, with the way the current fundamentals and the current themes are, the geopolitical elements, the risk aversion, that could very easily happen. And of course, we could even see those spikes into 2000. However, at this moment in time, we are seeing the gold prices starting to level out a little bit in the short-term perspective. And it's just about being conscious of how far are we up in the range to then really ascertain, well, is there value here? Is there perceived value of buying gold? Yeah, you might get short-term swings off of news and volatility, but if you're not trading the news and you're not catching those moves very, very, very quickly, those moves are probably going to exacerbate out of your control or out of your reach, whereby the entry of optimality isn't really going to be there. And I think that's really, really important as well. So gold is starting to issue a little bit of a consolidation, but again, being cautious, as I said, over those geopolitical elements, those other factors that as traders we need to take into consideration, and then looking at the sentiment, looking at how that factors into market conditions in the back end. As I said, with the GBP USD, funnily enough, obviously yesterday with the euro moving lower off of that brief snap in dollar strength yesterday back into that 106.70 level, of course we saw cable prices move lower back into that 121 handle. Now we were trading up at 123s last week, so it shows very quickly in the space of a week or two we can move those extra 1-2 percentage movements very, very, very quickly. And as we said, we're back into that value area down around that 121 handle. We have seen a little bit of a rally today, but that doesn't mean that it's going to be sustained, because of course if that DXY were to pick up strength again, if gold was to break out, let's say on a geopolitical element, we could see risk aversion out of those G7 FX currencies, out of the indices, into safety. So that flight, that caution over flight to safety should be a paramount all times this week in case there is a sudden spike in volatility. In the meantime, if you look at dollar yen this week, obviously we'd spikes last week, we'd spikes at the beginning of October, we'd spikes early this week as well. Dollar yen is still holding under that 150 handle, which showing that consolidationary element, 150 has been a very, very important level. Neil has alluded to it a few times. We've talked about it on previous FOMC meetings as well. And obviously going back to last autumn, last winter, when we had that massive reaction from 150 as well. So that's why it's really important to just kind of be cautious and be nimble enough to reactions of market conditions as well, not to be kind of trading against the trend, trading against the curve. So as we look at the indices today, bringing it into the short-term perspective as we approach 230, as I said yesterday, very, very clear selling. We started to see it visibly yesterday evening. We'd spikes in volatility. However, through the Asia session, we saw that really land lower into that 4300s of where we're trading at today. You can kind of see it there yesterday as well. 6 o'clock, 7 o'clock, we drifted lower through the evening. Aggressive selling. We went from 43.70, 43.60 yesterday, all the way down to that 4300s, which saw a fairly decent runoff level. Now we have found a little bit of bottom, as I've mentioned there previously today, but just be cautious to see how does the market conditions react. Now on the day, the best way to look at that really is by looking at the points of control, just to gather the short-term value areas for today, to see where is the reciprocated value areas, the volume indicator, really to try and ascertain risk reward, but also value as well within that regard. So 4300 I think is going to be the benchmark. 4307 is your point of control. So that area between kind of 4300 43.10.15, I think is going to be pivotal there today to see how does the battle between buyer and selling sentiment actually react and dictate around that level. Yet we might see price action rally back above the 20s, continue and retrace back into yesterday's value region, which we know is up around the 60 handle. But just being cautious, because of course if 4,300 gives way in the S&Ps, then you've got that deeper runoff zone where price action can really start to escalate even further declines of where we're actually going back to the levels visited last Friday week prior, which of course was obviously NFP day. So we're just obviously watching that very, very closely. Yes, there is short-term optimism into the open, but we just want to be making sure that's sustained for price action to come back up into yesterday's value area. And of course, on the converse, if we break through, then you can start to look at some of the monthly lows, which is coming in 42.60, 42.50 as a barometer to gauge in the spot markets. So that's what we're looking at there in the S&Ps. If we look at the NAS again, just while we're looking at the indices more broadly, the NAS really is going to be following kind of a similar suit. 900s, we mentioned 900, 950 yesterday. Yesterday's value area was around that 15,100 level. And of course, we saw that massive runoff. Well, not massive, but fairly significant runoff yesterday through the course of the evening. And of course, where we found that bottom around 14.9. We have seen a little bit of a bump and run since 11 o'clock today, as we said. But again, back into that 15,000. I think 15,000, nice psychological round number, triple zeros. We know that there's probably going to be a fair bit of debate or kind of value area being kind of visualized there at 15,000. So I think it's important to keep an eye on that psychological level. While if you look at the value area, as we said, the 900s is really the point of control for the day. Now, as you can see, the point of controls, we are trading higher into the session. So I would just be kind of conscious that if we were to, let's say, fail 15,000, start to see visible selling coming through, you're really looking at 100-point runoff in the NAS back down into the value area, back into the high 800s, low 900s. So do keep an eye on that one today to see if there is any sort of mitigation back into the lows of the session. And then the same thing really should apply to the Dow Jones as well. We know the Dow Jones is quite choppy. We've had a bottom here form just above the 550 level on the Dow Jones. We are trading around 700s. Again, double zeros, 700s is holding its highs into the open. We are seeing a little bit of chop and volatility in the first couple of minutes. So I would keep an eye on that to see actually whether we can break through 700s. If we can break through 700s here into the Dow Jones, you're really trying to mitigate that sell-off that we saw visualized yesterday afternoon. And that's exactly what I mean. This area in blue here that we've just highlighted, you can see where did the selling really originate from? The 900s, just below 34,000. We sell off quite significantly into the lows. 500s, 550s poses as a bottom. So of course, if we're taking out this area here, we actually might start to see a little bit of a pullback against that move, that selling impetus that was sold off yesterday. And then we're using our value areas to kind of reaffirm that, because of course, if we look at the Dow Jones on the value area very, very quickly, you can see that as well. 34,000, fairly decent sell-offs. 900 really is probably your premium value area there from yesterday. And of course, where are we today? Point of control 600. So we're looking to see, can the momentum break through the sevens? And if so, then we've got fairly thin volume here through the course of last night into the Asia session. So we're really looking for price action then to return back to the key value area, which we know is going to be around 900. So keep an eye on that one today, folks. So on the open, as I said, that first 30 minutes is going to be key. The Dow Jones so the S&Ps, as I said, is holding around that 43.20 level, becoming a little bit toppy. NAS is holding underneath 15,000, is actually coming back a little bit from it. And the Dow Jones is also holding considerably still under that 33,700. So really, until we get kind of clarity and directional bias for the afternoon, I would say hold off. Wait for the price action to come. We have Powell speaking at 5 o'clock. We have a number of his comrades speaking afterwards through the course of the evening. So there's plenty of time left in the day. So keep those bullets ready for when you really, really want to use them. Okay. And then having that little bit of extra caution in the background beyond that. So other than that, for the rest of the day, in terms of the calendar, just very, very quickly, let me just reopen the calendar. So as we know, we've got Powell speaking at 5. We've got bond auctions, tips auctions coming out as well. So obviously watching that closely. And of course, then we have, as I said, Goolsbee at 6:20, approximately speaking, Bostic at 9, Harker at 10 o'clock, 10:30. And of course, in the midst of all of that, We have data out at 3 o'clock as well with existing home sales. So existing home sales, you might see movement off of that if we start to see maybe the markets move one way or the other. So 3 o'clock should be paramount today as well. All right, that's pretty much it, everyone. As always, trade safe. Any questions, feel free to ask, and the community will be there all afternoon as well. So as always, trade safe, and see you all later. Thank you.